Welcome to the Nemeth Report podcast. I'm Dr. Tammy Nemeth, energy historian, analyst, consultant, and I'll be your host. Today I'm joined by Paul Tice to discuss the heart of net zero, and that is the ESG or environmental, social, and governance investing. Paul's written an excellent book, and I have to hold it up here. It's the Race to Net Zero or Race to Zero, How ESG Investing Will Crater the Global Financial System. And a few weeks ago, Paul published a report on the SEC's climate rules and how they will wreak havoc on the U.S. financial markets. I'm hoping we'll get to a conversation around both of those, but if we only get stuck with the race to zero, that's okay too. Hi, Paul. Welcome to the program.
Hi, Tammy. It's great to be with you.
I'm wondering if you can just take a moment to introduce yourself to the audience who may be unaware of your background and how you came to write this book.
Sure. So I spent 40 years working on Wall Street. I started back in my junior year of college, and then I called it a career 2 years ago in 2022. So I've seen what's happened to the industry, particularly over the last 10 years with ESG and sustainability making inroads. And it was clear to me that the view from within the industry, an insider's view, was not being articulated. And I think that's by design. So, I thought it was important. The first thing I did in terms of the next, phase of my working life was to kind of articulate all the problems with sustainability and ESG as it applies to the markets and kind of highlight what the real agenda is here, which is targeted at the energy sector. Net zero, decarbonization, climate change is the core of ESG. And I think that's been lost in some of the criticism of the movement over the last few years. It's really not DEI and CRT. It's climate change that's really going to impact every American if this is allowed to flow through. Last few years I've been teaching at NYU Stern in the School of Business. I teach a course on energy and infrastructure finance, and I can see how business schools are changing too to adapt to the new sustainability norm, which has been, frankly, fairly disturbing. The changes from when I got my MBA at Stern back in the 80s and now, and sustainability is being built into the curriculum. Yeah. And then earlier this year, I joined the National Center for Energy Analytics, which is run by Mark Mills, formerly of the Manhattan Institute. We're an energy think tank, and we publish papers that support rational energy policy, which is something that we've been lacking in this country, certainly under the current administration.
Yes, and that seems to be an issue in all Western countries, not just the United States, but lacking energy rationality in Canada, the European Union, the UK, Australia, all of the Western countries could fall under that umbrella, that they really should be looking more at a rational energy policy. I noticed in your acknowledgments that you talked about that you sort of felt compelled to write the book to give a voice to many people because you had learned from firsthand experience that there's a fear of retribution in talking about it. And to me, this is kind of like the whole climate science thing, that it seems only when people retire, they can finally be open and honest about what's going on. Can you elaborate on what some of your firsthand experiences were on this?
Sure. So, I've covered the energy sector since the mid 90s, so going on 30 years. First I was a sell side analyst, and then when I shifted over to the buy side, I mainly invested in the energy sector, across the spectrum, private startup companies, public companies, high yield investment grade, public equity. And over the last 10 years, really since the Obama administration, obviously, there's been a change in energy policy driven by climate. And so I've written publicly, I've taught at NYU Stern, as I said. So I've kind of had a public voice around energy for most of my career. And it's become increasingly difficult during my last 10 years on Wall Street to actually have a differing opinion when it comes to sustainability, certainly around climate change. And it was getting to the point where I really couldn't have a public opinion anymore. I had one senior manager tell me that it was a problem if the CEO of the firm had a different view than I, or perhaps said the other way around, which is crazy when you think about investing. You want to have a divergence of opinion, and the financial markets only work if you have two-sided markets. So by definition, you have to have people who are willing to buy where the other is willing to sell. So sustainability and ESG is the only investment strategy, if that's what it really is, which it isn't. But they're trying to make the argument that everyone has to have the same view, particularly when it comes to climate. So, and that's true, I think, for a lot of colleagues. In talking to, former colleagues and friends in the industry, you can't speak out. I mean, if you speak out when the CEO is saying we're going to do this, what it's going to guarantee is that you're not going to get paid, and you're probably going to be looking for a job. So everyone in Wall Street just goes along to get along. And I think they're hopeful that this blows over, but clearly it's not going to. If the regulators are now coming in and providing air cover, then everyone is going to be forced to do this. So ESG is a very pressurized system. The analogy I use is that it's like a natural gas pipeline. It only works if you have compression all along the system and everyone is under pressure to comply. And if people speak out, they get slapped down. It's like Chinese totalitarianism in terms of its construct, but that's why people will not speak out about it. I wrote right after I left, before I started writing the book, I wrote an op-ed piece just talking about this phenomena, about how Wall Street is cowered into not speaking out about ESG. And it was a struggle to get people even to talk to me anonymously, because they were concerned that if people knew we were friends, they could track it back to them, and that would create a problem for them work-wise. So it's a very perverse system that's keeping it in place. I think we need to acknowledge that Wall Street is occupied, if you will, when it comes to ESG, and we need to free people up to express their thoughts publicly. The first step to doing that is to really attacking all of these regulations coming now.
And there's a lot of them. There's a lot of regulations around. In the United States, of course, there's the Securities and Exchange Commission climate disclosure rules, which I hope we'll talk about in a few minutes. The EU has brought about its massive ESG framework, which has, I think it's 12 different chapters of covering absolutely everything. It's the Corporate Social Responsibility Directive, or CERD is what they call it. And it covers everything, and all the major companies have to start reporting this year, and over the next 5 years they want to bring all companies and businesses, the entire economy, into this reporting framework. There's a lot of other countries around the world doing the International Sustainability Standards Board's sustainability and climate disclosures. Canada's looking at it. Australia's looks like they just passed a law regarding that. The UK's looking at it. So there's all of these different jurisdictions around the world who are looking at implementing these kinds of disclosure rules. But I think what the really good point you made in your book and what you just said here is that if even one major jurisdiction doesn't do it, it can't work. And there's this pressure to include everybody, make everybody do it. So I noticed that with the SEC rule, it didn't mandate a lot of things, but California is mandating a lot of those things. So even though there might be a possibility that the United States somehow doesn't implement it in the same way as everywhere else, what impact do you think there is for California, for example, bringing this in? Will it survive court challenges? And is that a way to kind of pull the rest of the United States into this?
Well, I think California's strategy when it comes to climate and environmental policies has always been to kind of be the leader and then force the rest of the country to follow suit, because they are the largest in terms of population, the largest car market, right? And I think they're trying to use the same strategy when it comes to financial regulations. I'm hopeful that some of the recent Supreme Court rulings, West Virginia versus EPA, the backtracking from Chevron deference, will give a tailwind to a lot of these legal challenges that we have to these new rules coming down. You can never really handicap that now, because the judiciary has been packed with ideologues, right, on both sides. And even Trump appointees will give you a surprise ruling, as we saw with the Department of Labor ESG rule, right, which has been kicked now back to them. So we'll see what that happens in a post-Chevron world. But ESG, as you mentioned, everyone has to comply. It's a prisoner's dilemma. And if we can get one major player, and I think the US really is our only hope, honestly. I think Europe is all in on climate and sustainable development and also ESG, that they're lost. And unfortunately, it hurts me to say, I think Canada is in the same boat as Europe. So it's really the US where you have a divergence of opinion and you have a federal system which gives us red states that can lead the charge no matter what happens at the federal level, to challenge all these things. And that's what we need to do. We need to challenge every rule and regulation with regard to ESG, and then we need to keep going. Part of the problem with the Trump first administration was that they didn't keep going. They stopped the forward progress of all these climate regulations, but they didn't recover all the lost ground. I mean, we need to challenge the Paris Agreement, the Sustainable Development Goals, which are treaties that were never passed legally. We need to revisit the endangerment finding by the EPA, which kind of animates all of these regulations around carbon pollution, which it's not. It's a naturally occurring greenhouse gas. So I'm hopeful that we can do it. If the U.S. can be a holdout with regard to both climate and ESG, I think the rest of the developed world system, and this is a two-tiered system, we should acknowledge that the developing world is watching the industrialized world basically kill itself economically, right? So, and that was always by design. But if the U.S. can be a holdout, I think it'll expose the fraud of the argument being made, and then it should eventually crumble. I think that's why people were so animated when Trump won, right? And he pulled us out of the Paris Agreement, because they realized that everyone has to be forced to comply. And we're using the same approach with ESG that we have with climate. I mean, ESG denier, I'm sure, is being used out there. Effectively, it's the argument being made for people who oppose it. There's logic to this madness.
If I can step back a little bit, I'd like to get your views on who you think is behind this movement that's really been slow marching since the 1970s. First with the idea of corporate social responsibility, evolving through stakeholder capitalism, and now sustainability, climate, and ESG. Who do you think has been behind this movement?
Yeah, I think it's first and foremost the United Nations, honestly. I mean, their agenda, their mandate, they changed it in the 80s, right? So they kind of latched on to environmentalism, which, back in the 60s and 70s, I think we all agreed about what the environmental goals should be. It was clean air and clean water, and repopulating real endangered species. We made a lot of progress on that over the last 50 years. But then the environmental movement got hijacked by climate, which has been changing its argument over the decades. And then the UN grabbed a hold of the climate vertical, and then they layered in sustainable development in 1987, which at its core is all about climate, right? And hear that when this week is Climate Week in New York City with the UN in town and all the traffic. But the head of the UN, who's been the chief scaremonger around climate, he said the quiet parts out loud. Climate is the core of sustainable development and ESG, right? So it's all about climate, and ESG is just the financing mechanism, if you will. So, but it's been the UN. You mentioned stakeholder capitalism. The World Economic Forum has been the chief champion of that. That started out as kind of a post-war European management approach, and they've grafted themselves on now to sustainability, and they talk up climate all the time. So those two groups have been kind of echoing each other for the last 4 decades, really since the 80s. And then, in the interim period, you've had all of these NGOs and government-affiliated groups that have been, propped up with government money, frankly, to kind of echo the message, right? And so this is basically a government-led movement, indirectly through the UN and international NGOs like the World Economic Forum. But it's basically the government trying to direct the private sector and the financial markets, which, as we remember from business school, that's the definition of fascism. And there are many similarities, if you go through it, which I do in the book, to the fascism that we saw in Europe in the 1930s, both in Germany and Italy, and kind of the approach around ESG, public-private partnership. Well, who directs that partnership? Clearly, it's the public side. And initially, moral pressure was used to get corporations to comply, and now it's going to be, more direct regulatory pressure.
Yeah, it's interesting that you mentioned the fascist aspect of it because, that's a term that's been overused so often that people forget what it's actually about. And if I can just bring in some of the things happening in Canada, there's a bill before the Senate called the Climate Aligned Finance Act. And Terrence Keeley he was asked as to be a witness during the review in the Senate committee. And that this bill is exactly what what happened in interwar Germany, in how they just told companies how to behave, how to tell the banks how to behave. And if you look back to what happened during that period of time in Germany, the banks didn't really want to do what they were asked to do, but there was so much moral pressure and they were being pushed, not just by legislation and the people in the government, but by their own employees. And so when you talk about how the business schools are changing, and in a lot of the webinars that I've watched of the different leadership in the finance and business community, I hear a lot that their employees want them to do this, which then sent me back to thinking of what had happened in interwar Germany under the Nazi regime, and this whole pressuring businesses and banks to behave in a way that's in alignment with what the government wants and what their priorities are. That all being said, why do you think climate action is the overriding priority and is the center of all of this?
Well, it's the ultimate control over every individual in society when you think about it, right? If you can basically make the argument that carbon emissions are going to kill the planet and need to be controlled to save the world, then every economic decision comes under the government's, purview, right? It's going to limit. So it's all about political control. There's a lot of money being made around here, so we shouldn't ignore that. I think that greases the wheels. That gets it co-ops a lot of people, frankly, both within the financial industry and then the corporate sector, if they can make money doing this, right?
Yeah.
So there's a lot of conflict of interest, right? I mean, people who openly criticize all of this agenda, they're viewed as the ones who are conflicted, right? But I think we need to look at, the vast amount of money that's flowing from government to feed this narrative. So, but it's all about political control. I mean, if people will have to get an allocation of carbon emissions per year, that'll control what they eat, what they drive, their mobility, how many. I mean, these are not crazy things talking about limiting people's number of flights per year. The World Economic Forum, which people may like to pretend is like the crazy uncle just, blurting things out loud. They send out these trial balloons in the form of white papers and blogs, and they're telling you where it's going, right? So I think we need to take the other side at their word. We know that there is no energy transition. It's not happening, certainly not in the developing world. And technology prevents us from completing it right now. So we can't move away from fossil fuels, but still, the government leaders pushing this have not backed away from it. And they know it will fail. They think they'll be the ones in control if it does go badly. I think we need to start calling all this out. So 2030 is a real date.
Yeah.
I talk about in the book. Things are coming to a head. The fact that the other side has been wrong up until now in terms of some of their forecasts, and it can't work, they're just not going to debate you. They'll ignore your arguments and keep on doing what they're doing. And I think Europe will give us the best example of how bad things will become, because they are all in on becoming, a carbon-free continent by 2050, whatever that means. I mean, so Europe, during the early part of the last century, destroyed itself twice over in 2 world
Yeah.
wars. Now they're effectively going to do the same thing economically, but through more subtle means, trying to go after this phantasm of climate.
Yeah, that's a really excellent point, and I'd like to just step back a little bit about the people who are profiting from all of this, and to look at a little bit of the mechanics, because once you start bringing in talking about sustainability and ESG scores and whatnot, there's been this whole industry, like the ESG raters and rankers like MSCI, S&P Global, Morningstar, ESG Book, and others. Um, and they create these data metrics, and everybody weights their methodology differently, and so you can't get a consistent measurement across different groups or whatever. So depending on what you want, you can find a rater who will give you the right ranking for the investments you want to make. And I think it's really interesting that boutique sort of industry has grown up, as well as the proxy advisory firms like ISS and Glass Lewis. Then you have the sustainability advising and consulting. And then, of course, we have the software solutions. So there's a lot of people who are advocating for this in powerful positions, involved in companies that benefit from all of these different changes. And I agree with you that that whole monetary incentive is one way to kind of grease the wheels to that bring other people in who normally would resist this kind of stuff. But underneath, it's more of this sort of political leveraging going on. So, what's your take on these sort of people who are rating and ranking and jumping on this bandwagon?
Well, it's a mishmash if you look at it. The whole system is chaotic, right? As you mentioned, even the major ESG rating agencies, if you will, MSCI and Sustainalytics, they have their own approach, their own weighting. And when you look at ESG, it is scores of metrics, right? And anyone who's worked on Wall Street knows you have to keep it simple, right? Certainly in coming up with a trade idea or an investment thesis, but even looking at companies, because there's just not enough time in the trading day. And here comes along ESG, and literally, if you look at the number of ESG metrics that the UN through their various, surrogates are telling you, it's close to 200 that you have to track for every company that you may have to follow, right? So it's thousands of ESG metrics on top of the real metrics that matter, which are the financial ones. So I think at a certain level, it was meant to be a chaotic system to create a Tower of Babel, to argue that we need the regulators to come in here and standardize it. And if you look at some of the language in the final rules that came out from the SEC, they speak to that fact that, while there's a lot of information out there, it's inconsistent and we have to standardize that. So, I think that was always part of the predicate that was laid for the need for regulation. And if you look at some of these groups, they've been signaling that we need to have regulations for a decade now, really since they signed the Paris Agreement. So, but there's not enough time in the day to really reconcile all of these different ESG ratings and scores. And now with AI being the flavor of the day, people are jumping on that from an ESG perspective, saying, well, we really could get to the bottom of sustainability if we just had better data, right?
Yeah.
I mean, which just sounds like the climate argument for the last several decades. We just need to pump out more research, right? I mean, we're pumping out, more than one paper per day on ESG nowadays, and still they can't make the case that this leads to better performance for either a company or for an investor, right? So, but it shows you a lot of them are under pressure, or they're making money, or both, right? So the problem I think with the markets is that, or at least to show you exactly how insignificant all this ESG stuff is, if you look at the real rating agencies in the markets, Moody's, Standard & Poor's, and Fitch, they haven't changed their ratings fundamentally for really any sector, including the energy sector, since ESG came on the scene, right? So it's not changing anything, even though they're telling you that climate is this terrible risk that the markets can't seem to price, right, or understand, which is why we need to have mandatory disclosure. But at some point, the core rating agencies will succumb to all this. That's what the major concern I have is. And then once they do that, then all of the debt markets are going to be kind of, the gatekeeping function will be, carbon emissions, right? And
Yeah.
I think Europe will show us where we're going there because, again, as I mentioned before, Europe is the leading edge of all of this, including ESG, and their regulations are a few years ahead of us and much more aggressive. I mean, they are categorizing every economic activity in Europe, whether it's sustainable or not.
Yeah.
And if you're not on the list of sustainable, which oil and gas and anything related to energy is not, then that's going to cut off capital spending and it's going to cut off investment flows. And that's by design. So I think in Europe, probably starting over the next year, potentially, because 2030 is coming up on us, you may see European investors, pension funds, financial institutions, banks completely throw fossil fuels over the side and just disinvest from the sector, again, to get on the right side of all these regulations. So, it's a chaotic system that no one can really rationalize. So that's why they're bringing in air cover from the government now to kind of force it on everybody.
Well, I think what's interesting about the European situation is that one of the biggest suppliers to the European market is Norway. And Norway's company, Equinor, is a state-owned company. And so is there a possibility that by withdrawing that financing and, debt capital from publicly traded companies, then makes a case for more nationalization or state involvement in the oil and gas industry in order to keep supply during the transition phase?
Yeah, I mean, I say this as a Norwegian American. It's been very disappointing. Norway and some of the formerly state-owned oil and gas companies, their behavior around this. You'd like to think some of it's cynical, but again, it's mixed messaging. The Norwegian economy obviously is dependent on the offshore oil and gas sector, right? They should be ramping up aggressively offshore production in the wake of what happened with war breaking out between Russia and Ukraine, right? And the fact that all those gas flows need to be replaced. So the normal competitive response we didn't see. I mean, you see them, pushing EV vehicles on the country. I think from what I read recently, they have the most EV vehicles per capita, which is great. But it's a country with 5 million people, and they all live in a very concentrated part, in the greater Oslo area, right? So you can't extrapolate that out onto anybody else. And then you have their rainy day oil and gas fund, which is funded by revenues from petroleum, making these political statements that we're not going to invest in oil and gas anymore for climate reasons, right? Which, if you think about it, is probably just good diversification, but they spin it to make it seem like they're being, part of the climate party, right? And then they have these projects up in the far north where they are going to liquefy carbon emissions from the industrial sector, and then they're going to bury that below the Arctic Ocean. I think the Northern Lights is one of them. $800 million. And obviously that was the original number before inflation kicked in. So probably $1 billion for phase one. So all of this wasted capital to virtue signal. But at some point, if you take the argument to its logical conclusion, it's going to lead to the shutdown of oil and gas production, right? So that's going to hit home for the Norwegian economy. So you'd like to think that nationalism at some point will eventually kick in. The question is, are there enough politicians there that can make that case, right? And the problem with Europe is that nationalism has kind of been subsumed under collectivism really for the last 25 years that we've had the EU. So to the extent that, so you hear these stories about Germany and others where, conservative parties or less liberal ones are making inroads. Nothing ever changes at the Brussels level, but at least Norway has a shot where they're not, part of the core EU community and they have a vested interest in it. But if you look at the rest of the continent, to the extent they had an oil and gas industry, they've thrown it over the side, including the UK, which said no to fracking, I think, multiple times, right? So I'd like nationalism to kick in. Clearly, it's driving energy and non-climate policy in the third world. I mean, you see countries like China and Indonesia have no problem developing their coal industry, right? Obviously, it leads to a lot of jobs. It's very labor intensive, right?
Yeah.
But you see the complete opposite in the developed world, and I would throw Canada into that category too.
Yeah, absolutely. Canada has bought this hook, line, and sinker. And, you make an excellent point when you state that debt markets are being conditioned to seek an ESG seal of approval as a prerequisite for raising capital. And that's a quote from your book. Um, because if you get financial markets are used to that idea from Moody's where you have an A ranking or a triple A and all this different kinds of thing. And so now with the ESG raters and rankers, they're trying to do it in a similar fashion where you get an A or a B or whatever in how your ESG score or rating is. And I think you're absolutely right that it's a scam because it's all about shifting and tilting the playing field. Because once you get the the ESG framework for raising capital, then there's ways that you can shift that investment away from whichever industry is politically disfavored at any given moment. And right now it's hydrocarbons. Well, then anything high emitting chemicals and all of these other things that are decided to be a sin industry or whatever, you can tilt investment away from that. And you can use that ESG scoring as a means to do that. What do you think is the sort of unintended consequences of that type of approach?
Yeah, well, actually, the issue about the chaotic system, I think that's true. But when it comes to climate, I think there's consensus around that, right? Um, Consensus from market participants that that's something they have to focus on because the activists are telling them, right? And also, if your life and your working day is being subsumed with all this, you need to simplify. So focus on the big stuff. So I think the chaos in the system that we talked about forces everyone to do something on climate, right? And what do
Yeah.
you do to show that you're doing something? You disinvest. I mean, the thing with ESG is because it's driven by the government, when you take it all the way back to its source, the metric that we're going to use to see if we're really having an impact will be how much capital we throw at a problem, right? Right. That's the government test. I mean, if you're solving a problem, really doesn't matter if the problem goes away. We'll just keep throwing money at it, and it shows you we're doing something. It's going to be the same with measuring impact in the markets. So we need to direct capital towards green energy solutions, and we also need to direct it away from fossil fuels, which is interesting because for the last couple of years, we've been spending more on so-called clean energy investments than we have on fossil fuels, partly because fossil fuels is a much more efficient source of energy and it requires much less capital. And all the infrastructure is currently in place for the most part. But that's not good enough. We have to defund fossil fuels and we have to even put more capital towards clean energy. So, I mean, that clearly is the goal here behind all of this disclosure. The thing with ESG, Tammy, it's not like real analysis. Again, if you stand back, you realize it's non-financial, it's subjectively moral, and no one agrees on basically what the goal should be. And actually, if you look at all of these things, if you implement it, it's a negative. I mean, they're costly. They have no payout over the long term. So it's negative for company performance, and by definition, it can't lead to better portfolio performance if at the company level it's a negative.
Because it's interesting. I'm going to be devil's advocate here because I've heard these arguments all the time. What's wrong with mandating the collection of this data? Won't this make companies more efficient? Investors want it. Investors need it. So what would your response be to those arguments?
Well, the disclosure, you see, ESG works in a different way from regular investment analysis, right? So if I'm looking at a company, the first thing I need to do is get my hands on the data, right? To really have a view there. And then you supplement that with calls to management and channel checks, check your thesis, right? But with ESG, the first step is to get data around carbon emissions and all this other esoterica. But you don't take that data as step 2 and then come up with an investment thesis. You take that data and then you go back to the company and you tell them you need to change your behavior this way. And typically, if you're a fossil fuel company, that means you need to reduce your carbon footprint, right? And I don't want to talk about intensity. The industry has tried to buy time by saying, okay, we'll talk about intensity. It's like, no, it's absolute emissions. That's the goal.
Yeah.
And if you take net zero to its logical conclusion, it's the end of oil and gas production, at least in the developed world. And I think the industry fools itself by not doing that. But it's all about changing behavior. It's not disclosure. If there's plenty of disclosure out there, whether it's standard or inconsistent. We know who the big emitters are, right? I mean, we know that in the U.S., most of the Scope 3 emissions, right, are from the oil and gas sector. They come from oil and gas production, right? So the fact that the SEC, in its final set of rules, didn't require Scope 3 reporting changes nothing. That's not a watered down set of rules, right? We know where they are, and the activists are going to continue to go after the producers. And it's not just Scope 1 and 2 that they care about. They want to shut down and reduce emissions. So they're going to go after the industry because of all their Scope 3 emissions. And the other interesting thing about emissions is that if you look at the financial industry, banking and investments, all of their so-called emissions are Scope 3. So every investment dollar that they have facilitates Scope 3 emissions, right? And that's being used against them to force them to disinvest. But ESG disclosure is just a means to an end, right? I mean, good analysts would be able to get this information if it was really important and relevant to an investment decision, which it's not. And certainly with regard to climate change, we know where the emissions are, right? I mean, it's obvious where they are. You can approximate them. If it were a problem, how much carbon is being emitted by these companies, that you would have seen a change in terms of asset pricing over the past decade, which we haven't. I mean, the energy sector would not have outperformed in 21 and particularly in 22 if all of this carbon argument and climate argument was real, which it's not. It's being forced on the market by a vocal minority of investors who have the ear of the regulators. That's it in a nutshell.
Yeah. That's a really great point about how much money are you spending on climate makes the difference for activists and whatever. Because what the activists in Canada say all the time is that the companies aren't spending enough on carbon capture and that they want subsidies in order to do carbon capture. And if only that they were spending the money instead of giving it back to investors, then, maybe they would get a pass. But the goalposts are always moving. So for companies to think that somehow if they just spend more on these initiatives, they'll get a free pass from the activists, that's just not the case. And if they still believe that, I find that, how can you not know from everything that's gone on over the past 30 years, trying to keep oil and gas in the ground, especially in Canada, that somehow doing this would enable them to buy some time or some kudos from the environmental groups who just want to see them be ripped apart.
Yeah, I've been critical of the industry, and I love the industry. Obviously, I've covered it. And I think it's one of the most interesting, certainly from a technological perspective. I think energy is probably one of the most remarkable stories over the last 30 years with how hydraulic fracturing and horizontal drilling, seismic imaging has just changed the industry and changed the energy market. So, but if you look at the behavior of the leading companies, particularly the bigger ones, which have a bigger platform, for the last 20 years, they have basically been trying to bargain with the other side. So we're stuck in the third stage of Kubler-Ross in terms of, death and dying, right? They think they can bargain with the other side and they'll be allowed to survive. And so they invest, a small minority of their CapEx budget, but still wasted capital on green initiatives, right? You have Kinder Morgan, a great company. They buy a renewable natural gas startup, right? Take on all of that development CapEx, even though the gas that they ultimately will produce and put into the pipe is multiple times more expensive than regular natural gas, right? Or we have carbon capture, which seems to be, I think viewed as the salvation for the industry, So you've got Exxon, Occidental to a fault, is now doing it, thinking that they'll be allowed to survive. And if you look at the other side and look at some of the voices there, they're saying, and they have been saying for the last couple of years, oh no, carbon capture is not so that we can keep on producing fossil fuels. It's to decarbonize the industrial sector. It's to net zero out other stuff. We still have to, shut down fossil fuels, right?
Yeah.
Away from the fact that it's probably never going to be economic. And again, it's, we're burying carbon dioxide in the ground. And we're okay building pipelines to move CO2 around this country, but we're not okay building crude oil pipelines and natural gas pipelines, right? So there's a lot of irony, let's call it, around all of this, but it's all wasted capital at the end of the day. And these bigger companies think that because they're larger, they're integrated, they're some of the bigger independents, they'll be the ones still left standing. The natural gas companies have had the same view for the last 20 years because they have a smaller carbon footprint. Well, that got old very quickly, right? We went from a bridge fuel to methane is the most toxic greenhouse gas. We were actually wrong. It wasn't CO2. This shows you how the science is so, set in stone, that the methane argument has only come up over the last 10 years, right? So now we can't build any more natural gas infrastructure. We have an LNG pause now, which is completely driven by climate considerations, right, around NEPA. We can't build pipelines out of the Marcellus and the Utica, right? Or it takes so many years, it'll bankrupt the next company who's foolish enough to do that, right? So we're going after natural gas. I mean, back in the 2000s, you had, when coal was being attacked, right? You had oil and gas basically standing on the sidelines, trying to figure out how they could benefit from it.
Yeah.
Which is not a great look for the industry, honestly. I mean, you had Chesapeake, you had T. Pickens pushing their natural gas leverage or their CNG thing and saying coal is dirty. Well, coal has now been put into a runoff mode in this country, right? And they're coming already for natural gas and crude oil. They've already come after oil sands, right? Because we're moving down in terms of the complexity of the hydrocarbon. And so you're not going to stop them. The other side is not going to stop. You can't bargain with them. I think a better strategy, rather than just being on the defensive and hoping that this will blow over and then defending yourself every time you get sued, which Exxon did again this week. Why don't you go on the offensive legally, right? Why don't you start speaking out about, the climate science and the problems with the data and the whole argument? If you can undercut that, then all the need for these regulations go away. But it shows you how effective ESG is, and climate too, that even energy CEOs are afraid to do that in public.
Yeah,
right?
For sure.
Everyone's been cowed into compliance with it. We need to break that mentality.
Well, let me give an example. So at various parliamentary hearings in Canada, whenever someone goes there to talk about, maybe this kind of thing is a problem or legislation needs to kind of be scaled back. And there was one with the Climate Impact Assessment Act, which is basically the No Pipelines Act is what they called it. Whenever someone's there to give testimony, the first thing that the Liberal MPs or senators will do is they will ask the question, do you believe in climate change? To be able to say you're a denier and therefore we can just disregard anything you have to say. And I have a little clip here of our finance minister, Chrystia Freeland, who was speaking last year when she was discussing the budget. And this really speaks to what you've been saying about how climate is...
us who are in these positions of responsibility need to take kind of a deep breath and say, okay, what did I do today to fight climate change? What did I do today to be sure that we're doing the right things in Canada?
So that's our finance minister saying that every day we should wake up and say, what am I doing to fight climate change? And so she was responsible for putting together a budget that was supposed to, in some ways, counter the Inflation Reduction Act. And this hearing was about these different provisions in the budget to provide money for various green initiatives. So if that's what's informing our policymakers and telling people that you should be thinking about climate first And if you do talk about and criticize the government, they ask you, do you believe in climate change, without even defining what that means? It becomes very difficult for businesses or analysts or academics to speak out against it. And much the same way that you talked about the finance industry being discouraged from speaking out on these issues, because that's the sort of hammer they hit you with.
Yeah, I mean, it's interesting her phraseology. Do you believe in it, right? Because it is a belief system, right? It's not science by any stretch of the imagination. And science is never settled, and there's no consensus. And people can just do a quick Google search and find, thousands of scientists who disagree, right? And if you take the time, you can see that the purported studies that, validated the 97% consensus, and that's up to 99%. Those are all based on flawed methodologies. But still, it gets repeated in the press. And it's been very effective because people are very afraid to be accused of being a climate denier. And I've been accused of being that for years now. I laugh because it really says nothing. It's just to silence you. But, even around, I think it was those hearings, in talking to some of the conservative MPs who were going to be part of that, there was concern about not being viewed as a climate denier. So even challenging this, which again is the underlying premise, we're going to be fighting about details and execution rather than getting to the why of all this. And it's the late date in the process. I will agree with that, but we need to have this discussion. Because it's based on a false premise. And Canada shows you the extreme nature of this ideology, because I think you account for like less than 2% of the emissions of the world, right? You have a lot of hydro.
Less than 1.5.
Less than 1.5, right. You have a lot of hydro in many of the provinces, right?
Yeah, no, it's absurd.
You're not going to do anything. And now you're basically just going after a very important domestic industry because you want a virtue signal, right? I mean, it's crazy. So clearly there's no nationalist motive, right? Or national security or any sort of, patriotism, if you will, right? When it comes to safeguarding Canadians or the domestic economy, your standard of living. And we have the same problem down here. Our treasury sector is not much better, to be frank. And everything is about climate. Treasury Department, the SEC, the FDIC, the OCC, the Department of Labor, every agency down here, financial or otherwise, has been weaponized against fossil fuels. And eventually that's going to lead to higher prices. It's going to feed the inflation problem that we have here. It will do the same up in Canada, to the extent that we're one integrated North American market. And when that happens, they'll blame the industry. I mean, you saw that in Europe.
Yeah, absolutely.
Broke out. They had a problem being dependent on Russia. Gas prices spiked. They blamed the industry, and that was viewed as another reason to get off of fossil fuels because of the volatility, right? And you see that I mentioned about Exxon this week. So they're going after them around plastics, right? And they're arguing that, because plastic pollution is a problem, which clearly it is, we need to shut in plastic production, right? Not clean up the oceans, not deal with the third world problem we have with plastic getting into rivers and then ultimately into the oceans. We need to go back to the source and make less plastics. But there's no discussion about what's going to replace that, right? So the other side is motivated by faith, right? And it doesn't hang together. There's no logic to the argument. But they're very good at speaking with a hive mentality and sticking to the script. And a lot of people are afraid to be viewed that way. Certainly our Republicans down here, there are far too many of them that are concerned about being accused of being a climate denier, because whatever the topic comes up, they say, well, I like clean air and water, which is a non sequitur if you're talking about carbon pollution.
Exactly.
Right? So I think we need people with stronger spines, obviously, both in government as well as in the academic world and frankly, also in the financial industry.
I'll throw in another little anecdote here. I was watching a webinar of the Network for Greening the Financial System. the NGFS, when they were talking, they'd released a new report and they held this little webinar presentation, and they had somebody from the World Wildlife Fund there and some other activist people. And the WWF guy said, "Oh, I was just so overjoyed in reading your report, because it goes beyond anything I could have hoped and dreamed for with respect to greening the financial system." And all the central bankers there kind of tittered and said, "Well, at least we don't have to worry about your activists chaining themselves to our gates again, right?" And it almost felt like this extortion moment where, they hold this threat that we're going to protest in front of you guys, we're going to embarrass you and everything else, make you look bad in the press. But we won't do that if you comply and do these things that we would prefer you to do. And it kind of went in with what some of the things that you talked about in your book about not wanting bad press and worried about reputation. And I think that the environmental groups have been very good at leveraging that in order to get compliance with what they want. So it's extortion.
They're very theatrical. I will give them that, and it's very easy for them to have a pop-up protest at your headquarters or to at an annual meeting, right? And that's been
Right.
kind of the trend the last few years. You have these public displays, particularly for the banks, when they're holding their annual general meeting. Maybe you get a proxy fight. Certainly going to get resolutions related to climate and ESG. So that I think is not the main focus, the equity markets and what's going on with shareholder resolutions. Most of them are ultimately voted down, but just the bad press around that is enough to get a lot of CEOs to capitulate. And it just shows you there's a lot of cowardice, I think, in the corporate suite. To be honest, a lot of these CEOs are probably doing a calculation whether they will retire before all of this really hits the fan.
Right.
And they're probably thinking, okay, maybe it'll blow over, right? But I don't want to put my reputation, my career on the line, on principle right now. And so I think for all the firms that you have a very liberal CEO who believes in this, who is out championing sustainability or progressive causes, there are many, many more that are just afraid to be targeted. I don't think many should worry about their boards, removing them for that. But who knows these days? Part of the goal of the other side is to get more ESG friendly people on boards, younger people by definition. And, going forward, if we don't stop that, then, these CEOs will be on very thin ice, right? But it's amazing how a controversy or the threat of a controversy is enough to get people to capitulate. And actually working in the industry, that was one thing that some of these ESG service firms were big on. They track ESG controversies for companies, right? It can be any random headline that's negative worldwide. There's no context. And another time sink for you trying to explain away all of these, all this minutia. But it's enough to, have companies not want to be in the headlines. So, but I think we saw that with COVID. It doesn't take much for people to kind of toe the line with regard to, what the government is telling you. And I think ESG is no different than that.
Yeah, that's a really good point. One last thing I want to talk about the book is that you suggest that the meaning of fiduciary duty has been changed. Can you provide a definition of what fiduciary duty is and how it's changed and why that's not a good thing?
Sure. If you're an investor or you're managing money for a pension fund or insurance companies, whoever your client is, your first and foremost responsibility is to that client, and you have to put their interests above your own. And it's a pecuniary interest, so it's financial return. That's your job. If you're investing monies on the behalf of others, right? And that's always been the case. So you can't have non-financial factors coming in there. They're obviously subjective. They don't drive financial performance. That's never been proved by all the academic research that we've seen. And so ESG, by definition, should not come into the mix. And the problem is that groups like the United Nations ESG Advocacy Group, the Principles for Responsible Investment, which every firm on Wall Street is a member of, I would note. which is a problem because, with that membership comes requirements, and ESG is being integrated into really all the assets under management in the global system because of that membership standing. But they have been working for the last 10 years on pushing governments and regulators to change the definition of fiduciary, right? They actually released a white paper, which they worked on with Al Gore, who's also making a lot of money with sustainability because he's part of a Generation Investment, which is a sustainable investor. And they authored a white paper that said that the new definition of fiduciary responsibility in the 21st century requires you to use an ESG approach, not just allows, but it requires you. And obviously, you should be bringing in all of these non-financial factors into it, and what the client wants with regard to environmental, social, and political factors, right? So it's a complete inversion of the traditional definition of fiduciary responsibility, which has always been about financial return. And the UNPR has lobbied governments around the world for the last 5 years to put this in place. Europe has responded. They have the most, ESG related regulations, of any area of the world right now. Canada and the U.S. are following suit now. So, but it's a fiduciary responsibility. It's a breach of fiduciary responsibility, and integrating it into an existing fund after the fact that you raised initially with no talk of ESG, obviously by definition is a fiduciary breach, right? So you really can't justify any of this. That's why they have to change the definition of fiduciary. And the Department of Labor rule that we talked about, that will do that, right? It will basically allow you to use ESG and factor that in, and that will eventually ripple to other types of accounts. I think insurance companies as an investor class is at risk of capitulating as well. Obviously, on the business side, they've been echoing all of this climate hysteria about their claims that they're seeing, which is not true when you look at the data. But I think insurance companies could also go the way of some of these public pensions as well.
Yeah. And I know in Canada, the insurance industry is trying to get the federal government to take over part of the insurance coverage, especially when it's weather related, which is like most insurance coverage. So they have a vested interest in pushing this idea that there's this increase in bad weather, and therefore the government needs to take up covering that as insurance to let the insurance industry off the hook. And that's a whole nother conversation. But if you have some time, can we just talk for a few minutes about your paper on the SEC?
Sure. So we analyzed the rules that the SEC came up with back in March. They've been stayed right now because they were immediately challenged by a number of red states, as well as business groups and companies, including energy companies. So we'll have to wait to see what the resolution of that is. But clearly, these new rules overstep the mandate of the SEC. I mean, their mandate is to be the cop of the financial markets, right? Here, they are basically trying to set energy and economic policy through the back door of climate disclosure. And so the rules are designed to change behavior. Like everything else with ESG, these rules will change behavior, both for companies as well as for investors. And they're designed to go after traditional energy. I mean, if you look, so there are three main pieces to the climate disclosure. You've got climate-related physical risks, which is weather. And then you have climate-related transition risks, which is regulatory risk, and all of the litigation and other fallout from that. And obviously that is specific to the energy sector. So the physical risk will get everyone reporting about the weather. It'll feed the narrative, right? It'll be a very expensive exercise in reporting, but it'll keep the argument going. And then the transition risk piece will specifically go after the energy sector, highlight how risky it is because the government's policies are going after it. And then the third piece is disclosing your carbon emissions, right? Scope 1 and Scope 2. As we said before, it's not Scope 3 required anymore, but we know where all of those Scope 3 emissions are hiding. And so it's designed to basically cut off capital to the traditional energy sector. I mean, if you're an investor and you want to have an impact on sustainability goals, you've got to control your Scope 3 emissions, and you do that by moving your capital from one place to another. So that's how it's going to work, right? But clearly it oversteps their statutory mandate. And I think the recent ruling around foregoing Chevron deference is good. West Virginia versus EPA, where the major question, clearly this is a major question of economic and energy policy that a financial regulator should not be delving into. So you would like to think that on its face it would be overruled, but again, we've gotten some surprises out of the judiciary, and they'll ultimately, I think a lot of them will have to go up to the Supreme Court, and we've got some curious rulings out of the Supreme Court over the last several years, even with a conservative majority. So we'll have to see. But I think the red states need to continue to keep up the charge around all of these regulations, and there are more coming besides the SEC. We've got Treasury, the Federal Reserve, the OCC, as I mentioned, and all of this is going to embed discrimination against oil and gas companies, which is a violation of the mandate of these regulatory agencies.
Yeah, and one of the things I want to point out is that you have an appendix in your article, in your report, where you talk about the federal full court press, and it's all of these different pieces of regulations and legislation that are being put together. It's not just one thing, it's multiple pieces that are being put in place that make it very difficult to fight, because you have to fight all of these different things, not just one thing. And I think one of the things you pointed out in your book also that's related to this is that the red states fighting seem to be focused on one thing rather than this whole sort of matrix of things that are being put in place in order to basically discriminate against anything that's reliable energy and what is considered high emitting.
Well,
we're the redirection of capital flows and everything.
Yeah, I think the red states have done a good job leading the charge. I think there's room for improvement. There's a lot of inconsistency, even in states like Texas, which has allowed a lot of renewable wind and solar into their grid, which they control. ERCOT is state specific, and it's going to create problems for them. So I think they're suffering from the free money syndrome too, because part of the plan of the Biden administration is just throw a lot of money at it and force you to be part of and co-opt you, right? They did that with Obamacare and Medicaid, with some of the red states. They're doing the same with the IRA and some of the things that they're pushing. So, and then with ESG, they've been passing their state-specific rules, which are good. But again, we don't want to get lost in the weeds, go after specific companies. The fight is with all these regulations, and there are many of them. And so it's laughable that some of the administration, particularly in the Department of Energy, would try to argue that this current government is supportive of oil and gas, right? Because production has increased over the last 3 years. I mean, that's recovery, right? I don't think we should be doing high fives because we've gotten back to where we were in 2019. And the drivers around that were, temporal, right? We had the private to public consolidation trade. So private operators were driving a lot of that recovery in oil and gas, in oil production. And now that's gone away, and we're going to flatline, right? So, but the list, and the other problem with climate and ESG is it's happening behind the scenes. Nobody voted on this. I mean, certainly we haven't had a climate election here in the US. I don't think you've had one up in Canada, but the regulatory agencies are pushing this through non-democratic means. And so in the piece, in the paper, just listing it out just shows you what we're up against, because they're doing everything they can through multiple agencies, both financial as well as environmental, to both crush demand for fossil fuels and then to curtail supply. And as I wrote in the paper, I think this SEC approach, cutting off capital, could be the most effective, right? Because that will shrink growth if you can't find capital. And it's already happening. Tammy, if you talk to people in the industry, we have banks that are backing away. And you're seeing this up in Canada too, because of tar sands, obviously being, the latest environmental or climate, cause celeb. But, we're already seeing banks pull away from lending, right? And you're seeing like we're not seeing as many private startups that we should. We're not de-risking new plays or frontier plays. So the industry is kind of being put into a box, right? And that's being, I think, fed also by the fact that the public markets are more hostile, right? And, you need to reduce your dependency on external financing. So you're seeing more capital discipline finally, right? But it's definitely already occurring on the margins. Private equity funds that are focused on E&P that have stellar track records over the last 10 years, investing across the changes in shale and commodity prices, they are having a hard time raising capital with their existing investors because you're always losing somebody over time.
Yeah.
We've lost the college endowments, right? The blue state public pensions, forget about that. And I think the insurance companies, as I mentioned, they are probably the next to go. So it's weighing on everybody, and it's definitely negative for the industry. And the industry ignoring this, I think it's at their peril. I mean, they have to realize that now is different, right? The other side actually means all this, and there's a method to this madness. It's one thing that there were a number of things about the Obama administration that I didn't like, but one of the things that was most grating was all of the above that they would throw out when they would talk about energy policy. And clearly, when they said all of the above, it was in going after fossil fuels. And you see that same kind of wordplay with the Biden administration. They talk of whole of government approach around climate change. What they really mean is a whole of government approach shutting down fossil fuels. And just a listing of everything they've done in the last 3 years shows you that they mean it.
Yeah, and when you look at who some of the backers are of these policies, I think in particular of the Bloomberg Philanthropic Foundation, right? Because they started with the Beyond Coal. Now they're on Beyond Natural Gas, Beyond Plastics. So they've really been leading the charge on many of these, along with a lot of what I call mega foundations, where there's like hundreds of billions that go into this kind of activity for changing the system. And what I found interesting was your statement that there will be an iron curtain descending across Wall Street and the global financial markets. And so finally, what are the implications of this, not just for businesses, but for the average person?
Well, I mean, the iron curtain is basically if we're going to have if the SEC rules, are passed, and even if they're not, we're going to have to watch how Europe's ESG regulatory approach seeps into the U.S. markets, right? Because obviously the markets are globally integrated. We've got a lot of asset managers over here in the U.S. that have a European parent, the same for the corporate sector. So Europe's aggressive regulations will be something we will have to deal with over here in the U.S. But, the Iron Curtain is in the process of descending. If we have a new litmus test for how to invest based on some sort of moral test, which is based on how much your carbon footprint is, that's completely different, right? I mean, we used to have a pricing function where if something got really cheap, somebody would step in and buy it, and the markets would equilibrate, right? That's how you have efficient markets. But we're going to impose this new climate morality test. There will be unintended consequences, but it's going to be a very binary decision. I mean, if you're a bank, are we going to underwrite a deal for an energy company? No, right? So they're not going to have market access, right? They'll be forced to look for other sources of capital, which will be more restricted, because the public markets are obviously the largest ones. So it's going to distort the economy. As I said, it's going to be the most effective way, I think, of shrinking oil and gas production. So what will that do? And we talk about this in the paper. Everyone likes to talk about achieving a sustainable global financial system by 2030 in these gauzy terms. And no one ever actually puts any detail on that. They just assume that it'll be better than what we have now. But if you look at them and agree that carbon is the main villain here, and we have to make progress on net zero, then okay, if we decarbonize the U.S. economy as aggressively as the Biden administration wants to, and they want to take us back to 1960 levels in terms of emissions, right, which is going to kill our manufacturing sector, right,
Yeah.
if they are successful. But decarbonizing the U.S. economy is going to be negative for the manufacturing sector, all industrial production, anything that's energy dependent, including tech, which is very,
Yeah.
it only seems like people are now focusing on grid instability because, of AI, and we're not going to have data centers that have reliable power, which I think, is missing the whole point, frankly. But we're going to have higher cost electricity, and we already see, Europe experiencing that, less industrial production, higher energy and more volatile prices going forward. And for everyday Americans, obviously, the inflation has been very painful the last 3 years. If we go back to $100 oil, it's going to be much worse the next go around than it has been in the past, just because price levels are higher overall. But people can't afford electrical vehicles, right? I mean, in the new world, right? And they probably don't even want to drive them because of the whole range issue, right? Say nothing about the riskiness of them because they weigh twice as much as other vehicles, and you've got the fire risk, right? So they've pushed all these technologies out. We don't have the infrastructure to support it. The market doesn't want it, but in order to make sure that people are forced to buy it, we're going to not allow you to sell internal combustion vehicles over the next few years, right? And those will kick in 2027. I mean,
Yeah.
1/3 has to be electric vehicles, up from 7% now, right? So that's an aggressive move. The only way you can get there for the OEMs in the U.S. is by not producing ICE vehicles, right?
Yeah.
So they're forcing this on the market. There'll be unintended consequences, but even the consequences that we can anticipate will be negative. And I think Europe is showing its way. I mean, Germany, we talk about this in the paper. Just look at Germany, what has happened there. Their industrial production peaked 7 years ago.
Yeah.
Right? I mean, their reliance on natural gas from Russia obviously was a geopolitical error on a grand scale, but they're still shutting in coal and nuclear, right? They've got one of the highest percentage of wind and solar. I mean, that's going to destabilize the grid. And everyone's grid, at least in this country, regionally now, is interconnected. So your neighbor's problem will now become your problem because of all the interconnections. And we could have, multiple RTOs going down, right? And so, and we've seen that in Texas, right? We lost almost 250 people when that happened during the winter 3 years ago,
Yeah.
right? But still the other side just ignores that, and they believe that battery storage is enough to make up for it, or they blame natural gas for what happened in Texas, which is crazy.
Yeah.
So we know we can't really reason with the other side. We need to go after all of the regulatory support that they're feeding for this. And I just talking about the grids and the issue with some of the red states, this has been a 20-year problem with some of the regulatory commissions at the state level in our country, including Texas, where they've been pushing intermittent wind and solar into the mix. By definition, if it's intermittent, it doesn't run all the time. It's not dispatchable. It shouldn't be allowed in, right? But those have all been co-opted. And now we have all of these aggressive RPS standards here, and we're seeing what happens. Higher electricity prices. I'm in New Jersey. You would think that with gas prices doing what they've done over the last 10 to 15 years, my prices for electricity would be down. They're not, because we have a crazy Democrat governor in this state, and PGM has the same problem across all of those states. And we want to get to net zero by whatever, right? So we're building very expensive offshore wind, right? We're shutting down coal, right? We're not really building natural gas. And that'll be, Tammy, that's the real risk, I think, between now and the next 10 years. Taking our carbon emissions in this country down, I think it's been somewhat easy, if you will, over the last decade to 15 years because we've shut in coal. We've replaced it by natural gas, right? So by definition, that's a pickup in terms of carbon emissions, right? But that's no longer allowed, right? Because natural gas now is the new enemy. So we're going to be replacing not with natural gas, but with renewables, anything we shut down going forward. And so that by definition is, and we're not building new nukes, even though we should be if you take the other side of their argument. So by definition, we're going to have very unstable power grids in this country, and that'll roll through the economy, right, as we've seen in Europe. And I'm not sure why the markets, the financial markets, would do better in that environment, right? That's more like an emerging market than a developed market where you have to worry about, oh, the power's out today. I mean, that's something you had to deal with if you're investing in Nigeria. We may have to deal with that here in the US going forward. So no one ever talks about the reality of what decarbonization means. They just assume it's going to make everything better.
Right. And I like how you pointed out that it's really a euphemism for deindustrialization. And that's what we're seeing in Germany and the UK. Like for the UK, Carbon Brief has an interactive map where it shows from 2008 to 2018 the changes in the UK grid. And in 2018, the UK was actually producing, I think it's 30 terawatt hours a year less energy than it did in 2008. And everyone says, oh, well, that's great. The demand is down. Well, demand is down because they shut down their manufacturing capabilities and offshored it elsewhere. And you see that in Germany, where the chemical producers and whatnot either went to the United States or they went to China. BASF was bragging about their new facility in China. So, they're offshoring because it's too expensive, and all the new regulations for the European Union that is coming down, this year for the major corporations. It's a reason for them to deindustrialize. And what does that mean for the average person? It means you don't have a job. It means that you have to use less energy, that it's unreliable, as you point out, with the grid. It's more expensive. And so then you have to make choices. Do you heat your house, or do you drive your car, or do you eat? Right? So do you heat or do you eat? And that's a choice that people face here in the UK. I mean, it's rather frightening, actually, especially this winter. So we'll see what happens.
Yeah, I think if you can look at ESG, obviously, as part of the other two UN-led programs with climate and sustainable development. But over the last 25 years, we've had this globalization push, right? Ever since China entered the WTO. So you've seen a lot of movement of industry to the third world to lower cost, right? And in the US, you can see that, our electricity demand is kind of flatlined, which would be an indication of that, whereas it's taken off in China over the last 25 years. But going forward, that will continue, probably accelerate, but it'll be a new motivation. It's no longer just lowering costs. Now, countries will want to lower their carbon footprint. So let's move manufacturing from here again to the third world. And again, it's all part of this two-tiered system. It's designed to level the playing field with the developing world, but by lowering the industrialized world, right?
Right.
No one speaks about. And this whole justice argument that's been embedded into climate, that it's only fair and just that the industrialized countries cut their emissions first, because they're the ones that have polluted the world for the last 150 years, kind of feeds that narrative, which is obviously, it ignores the bad data that we have and the lack of historical data, and the fact that we can't really measure temperature very well, even in the here and now, and the models don't work going forward. It ignores all that, and they just make like another moral argument that this is the right thing to do to allow China and India, Indonesia, the entire third world, just ramp up their emissions and drive up their living standards while we watch ours go down.
So it's like, come up a little bit and bring this down.
Right. And what these financial regulations will do is, I think they will drive capital out of our markets into the third world, honestly, because if you want to invest in energy, where are you going to go? Well, you're probably going to have to look at national oil companies like Aramco, or those that trade on other exchanges, right?
Right.
So
yeah.
I think that's also part of this, that it's to drive capital and investment dollars to the third world to further help them, which again gets back to your original question. There doesn't seem to be any sort of nationalistic, or nationalist is taken out of bad context, right? But there's no patriotic spirit among the government officials in the US, Canada, or Europe that's driving this, that is protective of their citizens or their domestic economies. It's it's mind-boggling. I mean, you'd like to, I think it's partly driven by personal agendas, but it's just staggering how it's being allowed.
Yeah, I agree completely. I mean, one of the people who informs a lot of Canadian policy making is Mark Carney. And he was talking back in 2020 in an interview about how one way that they're going to help the developing world is to shift the capital, but companies will be making individual business decisions to buy carbon offsets or carbon credits or other things in the developing world, which will help bring them out and make the developing world more sustainable. And I thought, really?
Yeah, well, I think Mark Carney is noteworthy in terms of his role around all of this and kind of the conflict of interests that he has. But yeah, carbon credits, I mean, that's a made up economic activity. You're paying third world countries not to cut down trees effectively. They're trying to bring that to this country too. I mean, they're doing that in Central Appalachia. On top of shutting in coal mining, they're now basically, buying up all the timberland and not cutting down trees to kill the logging industry at the same time, right? And they're trying to do that with public lands, on a grander scale. So it's crazy. Again, to offset your carbon footprint. But Mark Carney, I think, illustrates the problem we have. And there was a recent, I guess he officially joined the Liberal Party recently.
Well, as an economic advisor to the Liberal Party.
Right. Okay. So I've made the point in the book and everything. ESG is all about politics. It's progressive politics. It's masquerading as finance. We should just acknowledge that, right? And when the other side says they're not going to talk to you because you're being political, there's a reason for that. But Mark Carney was the head of the task force on climate disclosures, and that was actually chaired by Michael Bloomberg. And he did that for the G20. And they came up with a lot of these climate disclosure rules, which are now being embedded in the SEC and some of the European regulations, right? So he's been part of this for a number of years. And then he was the head of GFANS, which at the COP meeting a couple of years ago was very aggressively trying to get companies and financial institutions to agree to set targets. His day job is at Brookfield. He's
in transition finance.
Transition financing. So he's telling banks, you've got to stop lending, and maybe that's going to drive more business to Brookfield, right? So there are a lot of conflicts of interest here. It's all political. I think we need to call that all out. And you mentioned Michael Bloomberg. He's very rich. He's throwing a lot of money at all this, but again, all of that drives more business to his platform, and he's trying to be, one of the basically ESG data and service providers on Wall Street. And since he already has a leg up on the financial information, he's been very aggressive. So all of this plays to their business interests, right? Which again gets back to the monetary conflict around all of this.
Yeah, and I mean, Mark Carney is now, is he chair of the board of Bloomberg or something?
I didn't see that, but would that shock you? That would not.
It's like, that's par for the course.
Right, so every time they go after an energy company, and even, I've seen this on social media where you express a view disagreeing around climate or anything else, or around some of the recent FTC pushback around some of the energy mergers. Obviously, that was part of this whole full court press, but they're not approving quickly, maybe not at all for some of them, some of these energy mergers that we're seeing as the industry consolidates. And they're using the specious argument about price gouging, which they're using more generally. And they went after Scott Sheffield, which was a disgrace around the Exxon. And now the Senate has opened hearings into collusion between OPEC, the U.S. industry.
Oh my gosh!
And this is this is the same government and the same Democrats who want to shut down the industry. They are now making the argument that the industry needs to produce more. Right. So it's just, no matter what the industry does, they can't win. But they're trying.
So go down fighting.
Right. So, I mean, again, we need to acknowledge that in terms of what the other side is saying. It doesn't really hang together, but at least, they speak in one voice, which is amazing. But, I think we need to call out the logic around a lot of these arguments.
Yeah. So if you were to sum up, what do you think is the most important three things people could do to sort of push back on this?
Well, I think speaking for my country, I'm sure it's the same up in Canada, but I think most Americans intuitively know that the climate argument is a scam, right? And most people probably laugh it off. I think we can't do that anymore because now it's obviously becoming real and it's going to start impacting everyone's everyday lives. So I think people need to, and in this country, we need to focus on the election coming up in a few weeks because we will go on divergent paths depending on who wins the White House. But I think everyday Americans need to just become a little more aware about some of this regulatory creep that's going on and start to give an earful to their lawmakers. And I think you probably will have a more receptive audience at the state level, the red state level, than at the federal government. But we need government resources to push back on this. And so I think the red states are our best option. But I think people need to be aware about this secret climate agenda, and no one's really talking about it. And in fact, obviously, Kamala Harris is trying to back away from it, and she never said everything that she said, even though for the last 4 years, they've described it as the Biden-Harris administration, which obviously we've never done that before. So now, again, they'll say anything to get in office, and then things will change. And I do think that come 2025, for Europe and the other developed countries that are on board with this, it becomes more aggressive regulatory-wise. I think we could be seeing the declaration of climate emergency, and that will give them new powers, right? Again, we've only got 5 years left on their dystopian timeline, and they mean it when they say we have to see oil and gas production peak. And they've been telling us this for 4 years. So this clearly is going to be a choice election when it comes to climate policy and energy policy. And we shouldn't fool ourselves that the fact that oil production is going strong now changes anything, right? Because a lot of this is happening behind the scenes. And then obviously, if you don't like individual companies or investment managers because of what they say publicly around climate or ESG or anything progressive, obviously you control your dollars, right? So, take your business elsewhere. But again, I think that treats a symptom. It's not going to solve the problem. And we really need the, government officials to kind of lead the charge, to continue to lead the charge on this and be more creative, frankly. I mean, the left has been very creative legally going after things that they don't like with regard to the energy sector, especially the Mountain Valley Pipeline, which when they came up with this creative argument about having jurisdiction around the Appalachian Trail for allowing a pipeline under it, right? Even though there were 50 pipelines already under it, they made the argument and they actually got a judge to approve it. And that delayed the approval of that for at least a couple of years because the Supreme Court had to step in and make a decision there. And that was enough to kill another pipe. We need that kind of creativity, right? They come up with these obscure endangered species to stop every pipeline. Now they're using it in the Permian Basin. We just need to be more creative legally. And then go after the easy stuff, the easy blocking and tackling. Start with the Paris Agreement, start with the Sustainable Development Goals, start with the endangerment finding, and someone has standing to challenge that, find the right test case, and bring that lawsuit. We need to be more aggressive. And again, to your point, we need to not be afraid to speak up in public and embrace what they call climate denial, right? We should not be changing our economy in the here and now based on what people are telling us is going to happen 80 years from now, and they've been wrong, for the last 4 decades. I mean, clearly they have to prove the concept to everyone, which they haven't done up until now.
No, they use the do no harm argument, which is ridiculous. But when you talk in that way, I wonder, is there any lawyers who would take up those challenges, and is there enough money on the sort of rational side to do this? Because the Engos seem to have unlimited amount of money and lots of lawyers lining up to make those cases.
Yeah, that's why I think we need to have states lead the charge, because it's going to require government resources to bring these lawsuits, right? It's going to be very costly for private individuals, even for conservative think tanks. And, the left will tell you that, conservative causes have all these, dark money, very deep pockets, these trolling organizations. But there's a clear advantage on the other side with regard to monetary resources. So we need to use like state finances to bring these challenges, as we've done up until now. And I think we have enough like-minded attorney generals and governors to do that. But I think they need to keep the focus. I mean, rather than getting into, personal fights around BlackRock to make headlines, let's focus on freeing the rest of the industry and all of the CEOs that are afraid to speak up by going after this regulation. Because that's why no one's saying anything right now, even if they believe it. They're worried about getting offside with the regulators. And if you're a bank, you've been hyper-regulated for the last 15 years since the crisis, right? So, if you're a CEO, again, you're not going to challenge your regulator in public. And then again, that ripples all the way down through an institution to line workers who are not going to challenge their CEO in public. They're just going to keep their head down, keep doing what they're doing. And in the process, it's like a boiling frog. Eventually the water gets high and everyone's dead. So they're missing the forest for the trees, not to mix metaphors too many times. But that's the problem with the industry. I don't think they can see what's coming because everyone's just focused on their day job, and the people at the high levels of these institutions don't have the vision, frankly, that they need to have.
I think a lot of the corporate leaders, at least in the energy industry, they don't believe it. They don't believe that this is happening, that this is the potential outcome. They just don't believe it. So I applaud what you're saying. I think citizens need to take some action, but the industry needs to realize that when they talk about 2030, it's serious, and they mean what they say.
Yeah, I mean that's the other thing that we really need. We need the energy industry to start speaking up, defending itself. I mean, who wants to work at an oil and gas company if the CEO is not the guy out there defending their livelihood, their industry, all the good things that it does for the economy and for people and our way of life, right? And instead they cower, they avoid a debate about climate change. Some of them cynically say, okay, we're on board with a carbon tax, which actually is going to be paid by every American. And so that's a cynical, I think, approach. And that's been part of the problem up until now. But a lot of them think it'll blow over eventually because the other side just can't be that crazy that they would have shunned in oil and gas. Well, we've seen crazier things in the last century in terms of government decision making. So, I think the industry is being fooled. It's going to take a lot at this late date for them to find a spine, to be frank. I think the case that we had recently going after some of these ESG activist firms with Exxon and suing them, that's fine on the margin. But again, they really need to be addressing the elephant in the room, which is, do we have an existential climate emergency or don't we? I mean, clearly the data don't support it. And I believe what the other side said, that the oil and gas industry has known much more about climate science than anybody else for the last 5 decades. They know that it's not real, that it's not supported by the data, right? That there are problems with the data and the models, but they're afraid to speak out. And they'll continue to waste money defending themselves against frivolous lawsuits rather than using their platform. Eventually, I'm not sure what it takes to do that, but I'm happy to be a champion to speak out in public, and eventually some of them will come along. I'll give you a good example. Actually, we do have some bright spots within the energy industry. So with Dakota Access Pipeline, obviously, which is the really terrible pipeline project that the environmentalists have been going after for the last 7 years. Energy Transfer is the sponsor there, right? Kelsey Warren founded that company, built it from scratch over the last 25 years. So it's one of the leading midstream companies, and they have, for the last 7 years, had to listen to completely false accusations about ruining the environment, infringing on Native American rights. And in my last job there, I tried to make the case that there was nothing to all of these allegations around Dakota Access Pipeline, and it fell on deaf ears because the United Nations Global Compact had designated this company as a violator of human rights. I mean, literally. So Wall Street now is ceding its investment decision making with regard to ESG to third parties, which is obviously
Yeah.
very dangerous. And that's another fiduciary problem to add to the list that we talked about. But Energy Transfer, Kelsey Warren in particular, obviously is one of the more aggressive CEOs. And he has taken on the left around this. He has sued the environmentalists and the Standing Rock Sioux around their allegations, right? And he brought a RICO case in federal court back in 2019, I believe, right? It was thrown out by a Clinton appointee. He refiled that in North Dakota, and we're going to hear that case now. And that will look for treble damages from Greenpeace and others, and that'll be $1 billion hickey, right? So that may be enough pain for some of these environmental groups, because up until now, they clearly have had a free option to sue everybody, right?
Yeah.
And now, they have to actually substantiate their claims and their behavior, and the collusion, I'm sure, has taken place between them, firms on Wall Street. I mean, the discovery around this lawsuit will be very eye-opening. But at least Kelsey Warren has been aggressive in pushing back. We need more CEOs in the energy space that are willing to do that.
Right, like Chris Wright of Liberty Energy.
Yes.
He's one of the other guiding lights.
I agree. And I know Chris, and he's been very vocal about it. He's been talking about all the good things that fossil fuels does. And we definitely have to get that message out there, certainly for the younger generation. But obviously, that's another issue around what's going on in our education systems. So.
Right, which you talk about in your book. So I highly recommend people checking out your book so they can see how you strung together all of these different elements to understand kind of where this has come from and the impact that it's had. And I just want to thank you so much for taking such a great amount of time to speak with me today. It's much appreciated.
Oh, thanks, Tammy. I had a great time.
Thank you.